A bank is a financial institution that accepts deposits from the public and creates credit. Lending activities can be performed either directly or indirectly through capital markets. Due to their importance in the financial stability of a country, banks are highly regulated in most countries. Most nations have institutionalized a system known as fractional reserve banking, under which banks hold liquid assets equal to only a portion of their current liabilities. In addition to other regulations intended to ensure liquidity, banks are generally subject to minimum capital requirements based on an international set of capital standards known as the Basel Accords. Banking in its modern sense evolved in the 14th century in the prosperous cities of Renaissance Italy, but in many ways was a continuation of ideas and concepts of credit and lending that had their roots in the ancient world. In the history of banking, a number of banking dynasties, notably the Medicis, the Fuggers, and the Welsers, the Barenbergs, and the Rothschilds, have played a central role over many centuries. The oldest existing retail bank is Banca Monte dei Paschi di Siena, while the oldest existing merchant bank is Berenberg, Berenberg Bank. History: Banking began with the first prototype banks of merchants of the ancient world, while which made grain loans to farmers and traders who carried goods between cities. This began around 2000 BC in Assyria and Babylonia. Later, in ancient Greece and during the Roman Empire, lenders based in Tempes made loans and added two important innovations: they accepted deposits and changed money. Archaeology from this period in ancient China and India also shows evidence of money lending activity. The origins of modern banking can be traced to medieval and early Renaissance Italy, to the rich cities in the center and north like Florence, Lucca, Siena, Venice, and Genoa. The Bardi and Peruzzi families dominated banking in 14th century Florence, establishing branches in many other parts of Europe. One of the most famous Italian banks was the Medici Bank, set up by Giovanni di Bicci de' Medici in 1397. The earliest known state deposit bank, Banco di San Giorgio, Bank of St. George, was founded in 1407 at Genoa, Italy. Modern banking practices, including fractional reserve banking and the issue of bank notes, emerged in the 17th and 18th centuries. Merchants started to store their gold with the goldsmiths of London, who possessed private vaults and charged a fee for that service. In exchange for deposits of precious metal, the goldsmiths issued receipts certifying the quantity and purity of the metal they held as a bailee. These receipts could not be assigned, only the original depositor could collect the stored goods. Gradually, the goldsmiths began to lend the money out on behalf of the depositor, which led to the development of modern banking practices. Promissory notes, which evolved into banknotes, were issued for money deposits as a loan to the goldsmith. The goldsmith paid interest on these deposits. Since the promissory notes were payable on demand and the advances loans to the goldsmith's customers were repayable over a longer time period, this was an early form of fractional reserve banking. The promissory notes developed into an assignable instrument which could circulate as a safe and convenient form of money backed by the goldsmith's promise to pay, allowing goldsmiths to advance loans with little risk of default. Thus, the goldsmiths of London became the forerunners of banking by creating new money based on credit.